just said two words that I actually wrote down, inconsistent and uncertainty. And the human beings don't act well, rationally, when they have uncertainty. They don't want to be the last fools to buy high. So everybody is asking, when is the market going to bottom?
You can. First of all, thank you so much for coming today. And from the West Side office, I know you guys had to come down to the East Side. I really appreciate that. My name is Nazila. I work with the title company, for those who don't know me, but I think I know everyone pretty much in this room. So let's get our panel started. I have Alfred Renna, who's going to be moderating.
No fights.
I have Jonathan Miller on the panel today, Jamie Heiberger from Heiberger and Associates, Bruce Cohen from Cohen and Frankel, Jacky Teplitzky, Eileen Foy, Doreen Courtright, Stephen Matz from Katz and Matz, and Martin Jajan from Jajan and Associates. And I also wanted to put in a plug for Citizens Bank, who's also here in the audience, Ron Reamer and Johnny B. If you have any questions later, you can feel free to ask them about your mortgages. So with that said, let's start. Thank you.
Can you guys hear back there? Yes? Okay. Barely? Okay, we're going to start with Jonathan. Jonathan, we're here to discuss the state of the market. But in order to do that, we need to understand previous market conditions and the direction of the market. Some agents are looking to make comparisons for an understanding of the state of the market using 2008 as a low, 2016 as a peak as for benchmarks. Can you give us an overview of the evolution of the market? Many of your charts date back 30 years, so please feel free to date yourself.
Yes, thank you. Yeah, I learned Excel when I was 5. So a couple things. First of all, there's lots of rules of thumb that brokers use to price or to help price. Every time I come to a meeting, the question is, what year should we compare this to? In other words, you have comps in a building, older comps, is this more like such and such a year right now? And so to not, be insulted personally, saying, I don't know. Right now I'm saying 2011. And I have some brokers telling me 2005. So if we're talking about markets like Park Avenue, which is the softest luxury market in Manhattan and has been for the last 5 years. To go back to the timeline, the 30-year window, I wanted to go back to when the Mayflower,
we have time.
But data, oh good, because data wasn't really public record then, but I do have some scrolls. So we're in this thing where right now things are obviously cooler, quieter, slower than they've been. How many people have been doing this for at least 30 years? Okay. In the 30 years, how many cycles have there been, up and downs, would you say? Big up and downs. Okay. All right, so 3 to 5, depending on how much you drank during one period, and
depends on how old you are.
And how old you are, absolutely. That's a great point. And usually, when we're looking at right now, you're living and breathing right now, and you see it. For those that are new, don't have the context of that prices go up and prices go down, sales go up and sales go down. And we're in one of those periods that I think, really began in the first quarter of 2018 with the Tax Cut and Jobs Act. I think that was an issue. Thankfully, for transaction volume right now, and we know activity is down, but I think if we didn't have a 1% drop in the 30-year fixed, over the last year, that the decline in activity would be far larger, right? Is there anybody that violently disagrees with me on that? And so, because I've never been one to sort of, align market fortunes with mortgage rates. I personally think that mortgage rates are way too low to be long-term sort of healthy and sustainable, because you want mortgage rates to be normalized, like in the probably 5 to 6% range, so we have credit conditions that are normal and it casts a wider net of who qualifies. And we can't really go much lower than we are now, in theory, although we could go negative, but I doubt it. How many think that we're gonna go into a recession? One? Okay. The odds right now are 27%, so I would say no. But remember and I've said this before, and this is sort of to get to Alfred's point, is that people, when they hear the word recession, you as brokers, when you're dealing with a buyer and they hear the word recession means global financial crisis, because that was the last recession, the Lehman moment and all that, and that's not what a recession is. So the context, and recessions are normal and ultimately good, but there's short-term pain. We're way overdue, but it doesn't look like we're gonna have one. So I think what you're seeing is just people are nervous, and the word uncertainty is, as I said, is the most overused word in real estate right now, but I think that's what's driving the conversation. There's a lot of unknowns. Are we going into a recession? What happens with the trade war? Why are rates plunging when the stock market is so strong, right? It's all confusing, right? So you, as the trusted advisor, have to just deal in facts. And the fact is right now that the stock market is not the economy. The bond market is terrified, so rates are falling. And rates are falling because of the trade war. So we have all these things floating around that aren't really natural, right? So that being said, does that make sense? Mm-hmm. Right? The idea, so if you're brand new to the market right now as a buyer, this is all new to you. This isn't 30 years of experience. This is what I'm seeing, and I'm uncomfortable. The one observation I want to make about the market right now is that it's, I got to come up with a cool name for it, but it's sort of like, it's inconsistent. It's like bad cookie mix. When you make chocolate chip cookies, it's a little, too thick and parts of it and too thin, and you haven't really mixed it up yet. The problem is it's really inconsistent, because you can have, there's been a bunch of contracts signed in the new project that Simon just talked about in Long Island at very big numbers. And Long Island in the region is the strongest market there is. It's defying gravity compared to other suburbs like Westchester and Fairfield counties. Long Island is seeing years of steady price growth, steady sales growth, and extremely low inventory. Even though inventory is rising slightly now, inventory is half the level it was after the financial crisis. It's literally half. That's how chronically low inventory is, right? Same thing in New York. When we go back in history, I only have 20 years of inventory data. And inventory data right now, or inventory levels right now in New York for the resale market, which is 85% of the market, is not high. It's elevated, it's above average, but it's about 30% below the record high. So it's not high. So the context is, we're looking through things like new development and saying, hey, there's a lot of new development out there. But it really depends on how you parse it out. And I just feel like there's a narrative out there that's sort of, we're in a black hole and we're all gonna die. Well, we're all gonna die, eventually. But That took a turn. But I really want to stress to you that, at least in my experience, I'm far less worried about the condition of the market right now than I was in 2009. I do think that the heavy lifting on the damage or the price declines, I think the heavy lifting has been done in 2018 into the first half of 19. I do think that we still have a little bit more price softening for the next year or two, and sales activity may be a little bit less than we're seeing right now, maybe not, but certainly nothing like we're on some sort of, as a recent New York Post headline said, where sort of prices are in free fall. Like, there's none of that going on.
If I could interject just as a comparison for signed contracts in October of last year to this year, we're identical.
Yeah,
We're not
because
down,
we just
we're
went,
not down, we're not up.
Great, because we just went through this crazy mansion tax thing that made sales activity up 15% in the second quarter year over year, and like down 14% in the third quarter. And when you combine the second and third quarter sales against the second and third quarter sales of a year ago, sales are down 2% year over year for the second and third quarter combined. And this is Manhattan everything. Second and third quarter compared to second and third quarter of 18, sales are down 2%, right? So just for the right context, the context is that sales are grinding lower, not collapsing. A lot of the verbiage that's out there is big price cuts, but they're off of asks that weren't even probably close to market value 3 or 4 years ago when they came on the market. So it's like, yeah, it took a 40% price cut. Yeah, but it's 40% from what? From nothing, right? And that's my sort of sage advice for your interaction with your buyers, because they're empowered by low mortgage rates, but they're still very nervous.
So you mentioned that in the last 30 years, there's a number of cycles that we go through, highs
You still
and
want me to
lows.
talk about me 30 years ago.
Well, no. So what I'd like to ask you is the cycle that we're in today and the factors that contribute to the ever-changing cycle. Are they identical to the previous cycles, the factors that affect the change? Or what are the different factors today affecting the cycle that we're in?
So, you know how the saying goes, this time it's different?
Well, it's like fashion, it comes back, but it's never the same.
Right. You stole my line.
Oh, sorry.
No, that's absolutely, so there's, I like to quote Mark Twain, who may or may not have said this, which is, history doesn't repeat itself, but sometimes it rhymes. And so there's a similarity to what's in this down cycle, but it's more similar to a couple cycles ago than the housing bubble. The housing bubble was credit driven. This is not credit driven. Credit is much tighter than it was. But what you're seeing is you saw a much bigger run up in prices at the high end than in any other cycle I've ever seen in my career. Usually, it's more across the board aspirational pricing, meaning setting asking prices that were sort of, bizarrely high. There was no shame in overpricing a property. That's all.
What do you think drove that up in 2016 to that peak?
So this is my sort of silly theory on this. It all started with the $88 million sale at 15 CPW, which the $88 million sale in 2012, where Sandy Weil, former Citigroup chair, bought a unit for 44, and then doing what he did when he was at the bank, doubling the value, and then he sold it in like a week to a Russian oligarch who was going through a divorce and was hiding assets in the US. This has all been documented. And that 88 million became the benchmark. And we started seeing, by 2014, we saw 21 transactions in California over $50 million. And we saw this whole aspirational pricing thing sort of expand nationally at the high end much more. and sort of infected the market as you move lower, but not so much at the starter market. And I think we're just extracting ourselves out of it now. And what's really interesting in Long Island, specifically, there has been a decline in listing inventory at the high end, that a lot of that stuff is being pulled from the market because it has no business being on the market. It'll never sell. So I don't know if that's even close to answering your question, or I just went off on a tangent, but because I didn't talk about 30 years ago. But what do you want? Where do you want me to?
No, that's good. That's good.
Okay.
I want to understand that. So for each of the agents that are on the panel, and they've been in the business for a very, very long time, what do you see as contributing, from your perspective, to the change in the market that we're experiencing today?
The change in the market,
Yeah.
What's going on in this market, I actually, a lot of the sellers I'm meeting with, I ask, where are you moving to? Florida, California, anywhere but here. They're moving. I think in the 20-something years I've done this, when I met sellers, where are you moving to? We're gonna move to a bigger apartment. We're gonna downsize. We're gonna move from the Upper East Side to the Upper West Side for our children's school. We wanna try downtown. We're empty nesters now. I don't have that inside moving in Manhattan. My sellers are leaving, and they plan on not returning. And I don't see the listings that I have on the market aren't getting, like, normally I'd have an open house and that there would be 15 people there. Now I'm like, excited if 2 people come. There's just not that many, I feel like there's not that many people moving into New York City. I feel like there's a lot of people moving out, and it's kind of, even after, I remember after 9/11, it still had an energy and excitement for people to want to own in New York City. I don't really see that in the buyers that I'm meeting today. I mean, I feel like there's more people wanting to leave and not stay here for taxes or, whatever the reasons are, they're leaving.
So what are those reasons, Jacky?
Yes. So I think that, Jonathan just said 2 words that I actually wrote down, inconsistent and uncertainty. And the human beings don't act well, rationally, when they have uncertainty. They don't want to be the last fools to buy high. So everybody's asking, when is the market going to bottom? Now, if you look at the New York Times, article, which, by the way, I have been stopped by literally anybody that I know in the street or in the elevator asking me about that article. So if you haven't read it, you should read it, right?
Which one, the 2-bed?
The 2-bed article, exactly. But in that 2-bed article, there is somebody that I'm not going to say his name, quoted saying, "Oh, I think that we are already at the reaching the bottom of the market." Now, Jonathan just said we have another year or 2 to reach that point. So even between us, our own colleagues, we have a huge discrepancy. So I'm also saying another 2 years. I just said it yesterday twice. I lost my voice talking to 2 different sellers that basically, in the first seller, we would be what I call the third wife, so the third broker. And the second one is somebody that bought 2016, and they want to put it on the market. So the kiss of death, what they call.
Oh.
So we have that, correct? So people don't act correctly. But then you say, but we have very low interest rates. You, Mr. Buyer, Miss Buyer, you can actually choose now, and you can actually get what you always wanted. You wanted the washer and dryer. You can get the washer and dryer. You want a building that allows pets. You can get that. And you can negotiate. And you can get a very good deal. And you can pay less on a monthly basis, correct? And even with all that being said, people are still hesitant to get into the market because of the uncertainty. Now, as you know, I'm not from this part of the country, correct? Or the world. So my clients are 40% of our clientele is from other parts of the world. The dollar is extremely high, too high.
Yep.
So right now, you have the foreign market not necessarily coming here and buying, even though that I can just tell you, I just came back from Santiago, Chile, and I was in the midst of basically almost a militant coup. And I was actually caught in the middle. And a lot has been happening right now in Latin America, and a lot of the Latin Americans now are thinking that they should actually come to the States. So that might change in the next year if all this unrest that is happening throughout Latin America will continue. And Martin is from Argentina, and I know, in Argentina, huge turmoil that just happened, new elections. So we might see that happening. So what we have to do is collectively, what is our job? This is what I think. Collectively, we cannot even use the comps that you guys are pricing out there, because most of the brokers are still pricing way too high. Until we all get the message, in Hebrew we say, Nofel ha'asimon, we are not going to be able to do business. If the buyers will see more uniformity in the prices of 2-bedroom condos, 3-bedroom condos, 2-bedroom co-ops, 1-bedroom co-ops, then they're going to say, okay, I get it. Now prices are reasonable, I should get in. The prices right now, we did yesterday, they said 2 pitches. The prices are all over the place. And everybody is, I don't know, because people are struggling right now in the brokerage business, so they are taking listings for any price. I mean, that's like insanity in my opinion right now.
Jacky, in response to that, I hear often from our agents about listings. There could be 5 listings in a building, all sort of priced the same, and then the 6th listing comes in, boom, 10, 15% below those. Okay, and the agents are furious with that 6th agent, because what are you doing? You're destroying the market in this building. But if they're priced the same and nothing is moving, what do you do?
You lower the price.
Okay, but then they're
And
not
I
uniform.
would be the one destroying the
But
market.
then they're not uniform.
Board problem.
I'm sorry?
We're going to get to that too, the board problem. So-
But that's a different story.
So how else are you handling the obstacles today to overcome? Because you're at the top of your game, as well as each of our other agents. How are you handling these obstacles?
So we are looking at every single listing right now and asking everybody in our team, the seller is not listening to us, they want this price. Are we walking away or not walking away? What are we doing? We are walking away.
You as a broker are walking away
Walking
from taking
away.
the listing.
Yeah, say, call me in 6 months, okay? You'll be back. I mean, there is no point. First of all, it's too expensive, it's too demanding. Then you have the sellers calling you every single day, 5 times a day. Oh, no showings? Oh, what about tomorrow? Oh, what about the day after tomorrow? So what are you doing? The only thing that you're doing is holding hands and not doing business. So you have to make that determination. Do you want to hold hands or do you want to make business?
That's a very valid question. Doreen, what obstacles are you seeing in your business with buyers and sellers? And you can also answer to leasing as well. And how are you overcoming those obstacles?
Well, I think everything that Jacky said, she pretty much nailed everything. What I would like to see is, I wish that interest rates would start to go up, because I feel like there's no urgency for buyers, because they feel like interest rates are only going to go lower, so that they take their time. They go and they see an apartment and they like it and they say, I want to put in an offer, and then they disappear for 10 days. So, the buyers are just dragging everything out, and it's so frustrating, because you think you're going to have a deal, and then they come in with some ridiculous offer. But, I think if there were some talk on CNBC that interest rates are going to go up in January by 1 point or 1%, then I think that people would start to say, well, maybe I should buy now. So that's kind of what I feel like with buyers. I feel like there's just definitely no sense of urgency. And there's so many buyers out there, and they come to open houses and you think they're going to make an offer, and then they just disappear.
But we are doing deals.
Yeah, no,
Every
I know.
single day we are signing
Mhm.
contracts. And like I said, last October was equal to October of this year.
Well, I
So
think
we're
you have
doing
to
deals.
have a lot of buyers to do deals. So I work with a lot of buyers, and I just try to pay attention to all of them, and literally just try to knock one off, once a week, once every 2 weeks, get another one done. But you just have to give them they have to feel certain that they can get a good deal, that they're buying now in a dip. I think that's really important for them to realize. They're locking into a low interest rate, so it's like the best of both worlds for buyers, but you just have to convince them, and it takes a lot of hand holding.
All right, you
Interest rates
mentioned
are
that
still
we're
very
in
low.
you mentioned that we're in a dip.
Mm-hmm.
Jonathan, can you speak to the dip? Are we in a dip? Does that mean that prices will be going back up? Is it a good time to buy? Would you buy today?
Which one should I answer first?
Are
So,
we in a dip, and are we near the bottom of the dip, or are we still dipping further?
I think, well, we're clearly in a dip, and we're down, there's nothing worse than my company getting a request for somebody to do an appraisal on an apartment they bought in 2016. They're always surprised that it's less, right? So you
By
could
what, 20-25%?
No, I mean, it depends, right? So it's a very high price versus, a studio. That's different. Studios didn't fall from, the last 2 years, at least the ones we're seeing.
Right.
It's softer at the top, like the narrative that we've been talking about for a while. Just one quick thing on interest rates, is that I'm about to refi my house, and my mortgage broker said, oh, wait till February, March.
Come down.
Rates are gonna, everything, no matter what the Fed says, and I agree. I think rates are gonna be lower in the next 3 or 4 months than they are now.
But isn't
Who knows?
It's an election year?
Oh, yeah, so,
So it's an election year.
yeah, so just one aside, because I'm really trying not to answer any of the questions that I already forgot that you asked me, is that that every year, starting with 2008, there has been the federal elections, the full election or the midterms, there has been a pause starting in late summer through the fall, and then after the election, no matter who wins, there's a release, right? That's a fact. Like, that's what we've seen in Manhattan, right? I think with all that's going on in Washington, I think it's gonna be a longer pause. It may have already started. And then there's gonna be a release, no matter what the outcome is. Like, I'm being very apolitical. I think it's just, that's a variable of uncertainty. And then there's a release no matter what the outcome is. No one likes uncertainty. And I think that's what's gonna drive the narrative in 2020. So yes, we're in a dip, and we're in a dip primarily because of the tax law and the combination of, it was just too expensive. We talk about low unemployment, but wage growth has stopped. Like, it's stagnant. It was rising tepidly. So really, if you average it out over a decade, wages haven't grown when you adjust for inflation. They're actually negative, but housing prices aren't negative. So I think it's a combination of affordability, which I think lower rates temporarily, helped some of that and mitigated some of the damage for the tax law. But I think the tax law requires, one thing about the tax law, I think SALT is what I'm talking about. I think a lot of people see SALT as like forever, it's this weight hanging over your shoulders, and it's not. What it is it requires that pricing adjust to SALT. Once that adjustment happens, it's a non-issue in my book. And we're in the middle of that, as Jacky was saying, we're sort of in this period. So yes, we're in a dip.
So, but here's my question. You mentioned earlier that the entire market had risen, except for Park Avenue.
Yeah, luxury market.
So Park Avenue stayed at the bottom of the dip.
It never had what's the opposite of a dip?
I
I don't know, like
Blip, spike.
a blip.
Can I
A blip.
It did not rise, yet it continues to fall with this existing market.
Why is that?
That's my question.
Wow, you have to answer my question.
Maybe
Because-
one of our agents can answer that
Yeah.
question.
Yeah, so I have a different take on Park Avenue and Fifth Avenue. My take is demographics. It's not necessarily pricing. The new generation in their 40s don't necessarily want to live where their parents used to live.
Condos.
And condos. They want to live in condos. They don't want to have problems with pre-war buildings that have assessments every Monday and Tuesday because of the plumbing. They want to have the amenities. And they are much more flexible right now about location. It used to be, and I remember that when I started in the business, everybody told me, oh, if you are a partner in the law firm, you have to live on Park Avenue. You have to have a Park Avenue address. Now, who cares? You can live in Tribeca, you can live in Hudson Yards. You have a lot of options. Also, now people are much more practical. They want to be able to go out and get their kids an ice cream and not to have to walk, 2 avenues to get their kids an ice cream. So I think that Park and Fifth have a huge problem besides the whole thing about 50% down and having 3 times, 4 times, 5 times, 6 times. So that's another thing, but that was always there. So that have not changed. I just don't think that the new generation wants to deal with that type of situation. They want also to have a liquid asset in their hand that they can actually sell, they can actually upgrade, they can move. They don't want to have this type of situation.
So you think Park Avenue is filled with aged baby boomers and grandmas and grandpas?
I cannot say I will lose my license.
The only comment about Park Avenue is that all the dogs are less than 50 pounds.
All right, we have a question here. So anxious.
This is for Jacky. Jacky, can we address the elephant in the room for co-ops? It's called the board. They don't seem to be reading the same information we read, and I had a personal experience, so I'm speaking very recently. Got the price week 1, and the broker told me, one of our brokers said, that quote will never pass the board, end of quote.
Yes, and I had the same situation. We actually had a board turn down that we actually managed to, resuscitate. I think that all the managers here in this office were actually involved in that case as well. That's a big, big, big problem. They are not getting the message, but from another hand, they are seeing that their value of their own property is going down. So the question is, when you start accumulating inventory in one building and everybody starts asking, what's wrong with that building? Why there are so many apartments for sale? So I actually think, if you ask me, I'm a very thinking about solutions. I actually think that the managing agents of this building, all these buildings, have to start talking to the boards, have to start showing the boards sales in other buildings, and have to address this issue. Because if not, you're going to have an explosion. You're going to have a problem that how many board turn downs can you have in one building? And then the building gets the stigma of the board turn down. And then people don't want to buy in those buildings because they're afraid of a board turn down. So 70% of our inventory are co-ops, and they really have to wake up and smell the coffee.
Just to add one quick thing. Sure. It is a fact that when a co-op board kills or turns down a deal based on price, that they are damaging the shareholders' equity in the building. They are violating their fiduciary relationship to the board as a board member, because they are trying to price fix, and you can see it in the data. It damages the prices in the building. They're doing a disservice. You have prices that go down and then they go up.
But they don't care. These co-op boards don't
They
care.
don't-
I had
they don't- they
two
don't understand.
Extremely qualified applicants, all cash, $10 million net worth, turned down on 2.3, all full asking on an apartment. turned down, and they don't care. And I have another application into a building where the owners get letters from the board saying you cannot sell your apartment for less than $1.5 million. The apartment is worth $1,275. We have been told we cannot submit a package at the price. So we try to do a construction credit because it does need renovation, and now we're being told by the managing agent that we can't do the construction credit. So we're like, we have a very qualified buyer. Everything's been done. So how do we, what do we say to this board? They actually don't care. They're like, you either, this is the price, or we're gonna turn it down.
That's actually a very large
Sorry,
topic,
Nizilla.
and I think we'll reserve that topic for either the end or even another separate meeting. So let's turn a little bit to our esteemed attorneys. Mansion tax, transfer tax, proposed pied-à-terre tax, the rental laws. How have these changes in our market and in our business affected what you do, and how do you deal with the buyers and the sellers and the brokers with all of these changes? Because I can't imagine that we as brokers are up to speed and knowledgeable in every one of these laws and changes, and we're effectively communicating that to our buyers and our sellers and our tenants and landlords. All four of you.
The pied-à-terre tax, if it passes, I had planned on practicing for another 15, 20 years, but if that passes, I'm gonna have to find something else to do for a living. As far as the mansion tax is concerned, you were talking about the SALT tax being baked in.
Yeah.
I was so happy that they didn't pass the pied-à-terre tax and it was just the mansion tax. For
Yeah.
one thing, it took a market that was dead at the high end and spurred it on. And at this point, I believe that that's baked in already. And if I think it says like $25 million, it's 4%, it's $1 million. If somebody can afford $25 million, they can afford $26 million. And I don't see it really hurting the market right now. As far as the rental laws are concerned, it's insane. I hate doing leases. You cannot protect landlords. And one of the questions that we were going to discuss was security deposit and how do you get around it. Other than the fact that co-ops, since it's a lease, will get a guarantor and then have the guarantor put up and even that is, they have the guarantor put up the escrow. Even that is scary because of the treble damage portion. If a landlord is found guilty, then they could charge the landlord treble damages, which is double or triple, and that's the scary part. So I think you should use this as an opportunity to get your people who have apartments to rent, tell them you can't protect them, and they should sell right now.
When are you talking about the investment properties?
All of the rental laws is another example of our fine friends upstate implementing law quickly and not taking into consideration one iota of the ramifications that's going to affect New York City. They probably don't have $40 million apartments in Schenectady that are renting for $60,000 a month. I would wager to say this. It's beyond the realm of comprehension. Security deposits, what do we do with diplomats? Have you guys dealt with this yet?
Yes.
Right, what do you do with diplomats where they are completely untouchable, they can do whatever they want, they don't have to pay this and that, and normally it would be get a certain amount of money up front. For conditions like that, there's these companies, Jamie and Bruce, we talked about, insurance, whatever. Well, they're a fortune. They cost a lot of money.
Yeah, 20%.
And I think it's going up, plus the first time fee. But then that's only going to be good for instances of a co-op requiring a year's worth of maintenance in escrow, something like that. That's a get around, a workaround, a way to circumvent it. But the security deposit thing, I don't know how to get around it.
Are we talking right now on the rentals or sales?
Rentals. I agree with.
I have a potential way of getting around
Yeah.
it, maybe.
Yeah.
I mean, first of all, let me say, I see the market a little bit differently perhaps than Bruce does, right? So, about 2 years ago, our business was mostly 80% foreigners, and then 20% New Yorkers or domestic people. Now it's probably shifted to about 50-50. And the reason for that is that the foreigners have disappeared, for the most part. or I should say the large next wave of foreigners. Like every time that, if the Brazilians dropped out, well, then the Russians replaced them. And then the Russians dropped out, and then the Chinese replaced them. And now there's nobody to replace anybody. So it's a little bit more precarious. Aside from that, I think the New York market is incredibly strong, and it can certainly take one hit. And by one hit, what do I mean? The mansion tax, great. The New York market has now taken perhaps 5 hits, at least the way that the foreigners see it, within 1 year, right? So first you have the progressive mansion tax that came into effect. Then, as if that wasn't enough, you also had the transfer tax came in effect at the same time, right? Then you had the landlord-tenant laws that came into effect, the revisions that are extra protectionist for the tenants, perhaps the most protectionist laws in the United States, right? And then on top of that, you had the LLC anonymity, which was completely taken away, and that happened just in September. So now there we've got 3 or 4 hits to the marketplace, and now what's the latest one? You have the pied-à-terre tax, which by the way, I commented on in an article in Bloomberg and Crane's New York. Shameless plug, you can access my Facebook page, it's there, right? It was just yesterday actually. And the New York market and the New York buyer can usually absorb one jagged pill. You can't expect them to absorb 5 jagged pills within a single year. Especially when, as someone else on the panel said, we're now fighting other states for dollars. Yes. And we're fighting other states for investors. So 20 years ago, Miami was like a blip, and the only, a handful of people would buy there. Now, it's a veritable real estate machine, right? And it has not only the foreign investor that has gravitated towards Miami, but it's also got the New Yorkers that are gravitating towards Miami, right? And so in addition to that, you've got other markets in the United States. I had a Brazilian the other day mention to me that he was thinking about investing in Detroit. I said, Detroit? Are we talking about the same Detroit, the one that's in the middle of the country? He said, yes, because the cap rates are very attractive, the access into the marketplace is very, very cheap, and the closing costs, the entry and exit costs are very, very inexpensive. So at a time right now when the legislature of New York should be doing everything that it can possibly do to spur growth, it's doing the opposite. Now, why is it doing the opposite? Well, in my view, it's doing it because of something that's on everybody's lips: income inequality. Whether it's between the riots going on in Chile, the elections going on that just happened in Argentina, or AOC and booting Amazon out of Long Island City, right? Something that would have been great for the area in all likelihood, right? And that's where these landlord-tenant laws, they come on the heels of all of this income inequality discussion, which obviously that there's a place for it, but how is it doing in terms of the market in New York? I have to disagree a little bit with people who say, well, you know what, it's just one thing that tended to happen. We need a little bit of a break from the legislature in terms of getting constantly, bombarded with new things that we have to contend with that make our marketplace less attractive than other markets.
So you mentioned about foreigners. When we were at peak with foreigners, it was about 30% of our transactions were foreigners. And now we're probably down to about 15% of our transactions are foreigners. So we fortunately still have people buying, and a lot of them actually happen to be Canadians buying here. But all of those obstacles and hits, coupled with a very strong dollar, for those of you that work with foreigners, are you finding that they're just watching the news, and as a result of what they see in the news, they're just staying away altogether?
Aftermath of the financial crisis that enabled it.
I think that there's a difference. I agree with you in terms of the delta of 15% right now. The difference is the foreign buyer who's buying a pied-à-terre for an emotional reason, for a business reason, because they're spending time in New York, because their child is going to school in New York, that buyer has not dropped out of the marketplace. The speculative buyer that's doing it for investment has completely dropped out of the marketplace.
I find that the overarching thing for us is all volume, and it all comes down to price. So why are certain things selling and certain things aren't? And why isn't the third broker? And you're right not to take those sales, and you're doing a service by lowering the prices. I have to tell you how many deals I have in the last month or two where it sat on the market and there was one buyer fishing around for the last 4 months. All of a sudden they get an offer and it's priced a little lower, and now there's a bidding war. I have a lot of deals with bidding wars right now.
2 last week.
And it all comes down to the fact that it's like, if I could give any advice to the brokers, somehow you have to get your clients to price things just a little bit lower, and with the idea of starting a bidding war. And I'm seeing a lot of that right now. And look at the sponsored projects that are selling. They're the ones where the sponsor is really being reasonable, paying, if not the whole, even the mansion tax now. In certain instances, they're paying the delta between the old mansion tax and the new mansion tax. So, and also in terms of foreigners for their kids, a lot of the foreigners that I see buying now are buying for their kids going to school, and it's a fairly big amount, and it's usually in the newer construction buildings, if not the newest construction to building in the last 3 or 4 years.
I know that, oh, Jamie, sorry.
You know, I've been actually telling people to price much lower, not just a little bit lower, because if you're in that, excuse me, if you're in that market below 2 million, that's your market where you're going to get into those bidding wars. So if you price it low enough, much lower than you may actually sell for, you know that you're gonna force a bidding war, because you're gonna get people there. And that is what's happening. I mean, there's multiple bids on things. You know, clients in that area, like right around $1 million or $1.2 million, $1.3 million, those things are going, they're not really, they've come down, but then they're getting pushed back up. You know, as far as, I just want to address on the rent laws, because I see this stuff a real lot in my business, because I have a really big landlord-tenant practice also. And on the rent laws, and I happen to agree. I don't think necessarily that on the if you're buying for your child that's going to school here in the state, in New York, that's necessarily changing that market. I think for me, what I always noticed, the foreign market, it's of course all the examples we're talking about, but it's really been also just getting the money here. You know, that was what also put like a really big stop on it. I think some of those things have lightened up, and so you're seeing, you know, pieces of foreign business again. I don't think on the deposits, you know, just getting to like that escrows and the maintenance. You know, one of the things we're all talking about, well, what do we do? What do we do? We all agree that it's the unintended consequence of the laws that it's affecting the purchase applications, not being, you know, the co-op's not taking the entire thing. You know, I actually suggested this. I was talking to Ken Haber the other day. When that happens, just have the seller hold the escrow. What's wrong with the seller holding it? This is only against the buyer, against the tenant in a co-op situation. It doesn't prevent the landlord from holding escrow and selling. So that's something also that people can be considering if you get into that situation. Personally, I think that one's going to get addressed right away. I don't think that it will stick where they can't hold the escrows. You know, ultimately it's going to come out that the rent laws, when they came out, they're talking about rent. They actually don't mention the word maintenance at all in the whatever 74. Yeah.
But Jamie, don't you think, because we just went through this, and the problem is that the seller says, I want to move on. I don't want to do anything. I don't want to have anything to do with my sale. I want to close. I want to move on. I don't want to hold the escrow. I don't want to do that.
Well,
so
I mean,
what
I would say number one, I mean, no one knows exactly what's going to be. I do think that we'll find a clarification really soon on that aspect of it, and I really don't believe that it's going to be affected in terms of the purchase side of it. So I think that we're really not talking about a long-term thing here. The other thing I would say is that if you really want to sell, then you do what you have to do to sell. And if that means holding an escrow, then you hold the escrow. I mean, so there are ways to get creative, and they'll get around that.
So with all of these changes, how would you like to advise us as agents? What do you want us to know that we should be conveying to our buyers and sellers? Exactly.
Be patient with due diligence, because buyers, a couple people have said, buyers are taking forever. 3 weeks to sign a contract. Oh, and you know, sometimes those of us that are lawyers here, we sometimes maybe go a little broker, which is lovely, and we say, you know, you better sign this because it might not be here on Monday. I mean,
every Friday.
That comes out of my mouth,
Friday,
right? I mean, I might need a desk here, but no. And you know what the answer is? then I'll lose the apartment. A couple years ago, you did not hear that.
No sense of urgency.
And for my lawyer colleagues, the amount of due diligence now, the inspections on 300 unit buildings, they're doing inspections on one apartment. Over and over again, I find. And, you know, if about what can be helpful, understand that we need that questionnaire back, and understand that we've got to get in to read the minutes. And we're working, and I know everybody up here, we're working as hard as you are to try to get the deal done. Well, we've got a client that says, I want to see the minutes for 5 years ago, not just 3 years ago. And I want to see the financials from 2014. I mean, what the hell for? I mean, you had a boiler that broke in 2014. Who cares? But that's what we're hearing. Like, people are almost looking for reasons not to move forward. So I guess the thing is patience. Help us. If I need help calling a managing agent, or send cupcakes, right? You guys send the cupcakes. But that's the key, is just the patience to sort of handhold these buyers. They'll sign. We're doing deals. I mean, I have a pretty, just a lowly lawyer, I have a pretty positive outlook on things. I think that New York is iconic. I think it's like a London and a Paris, and that people will always want to and need to move here. And it's all, Bruce, he said, all about the numbers. It's all about the numbers. When sellers realize, you know what, I'm not gonna make, my apartment's not worth $8 million to, it's worth, 6.1. Accept that, move on, sell your apartment, move to Florida, whatever you want to do. Developers are doing this now with not taking as much profit margin. That apartment is not gonna sell for $32 million. I've won that $32 million price tag. I think we're in contract for, 23 or something. These are huge numbers, but I think those original $30 million numbers were so overly inflated to begin with. Yep. It's the Emerald City. It's not real. So go ahead.
No, I was just going to say, one thing I would say, like, to say to your clients and your sellers is really, and I say this for decades now, is to sell when you can and not when you have to. That's a really big thing. And people can sell right now, and granted they're going to sell at a lower number, but I don't know, I'm one of those people. I'll take the money in my pocket today and make more money on it somewhere else. And you know what? I would sell now lower, and guess what? Go find yourself a good investment now, especially if you're sitting with one of those Park Avenue apartments.
Right. Bruce, what would you like us to know so that we're better brokers in the transaction?
I think you have to, like, some of you work with, like, there's a team that you put together. And when a client used to say to me, am I getting a good price for this? A seller, I would, in the past, would always say, I don't know, you have a good broker, you have to depend on your broker. Now what I'll say to a client, if they ask me that, is, I don't know if you're gonna get a good price, but going back to what you said before, if you wanna sell this, you don't wanna hold it for 2 or 3 years, you wait 6 months, my opinion, you're gonna get less money. That's what I say, and I would never have done that before. So the message is, if I'm on a deal and you're having that problem, I'm not willing to say they're getting a good, we don't know your prices. I go to closings and I have to look to see what the address of the property and how much it is. I come home, my wife goes, how much was the apartment? I'm like, I have no idea. But I do honestly believe that we still have a little ways to go, except for those things that are priced really well. So the message takeaway is you gotta get your sellers to price, and I think the buyers will come. I don't think you have to worry about it.
To our agents, what obstacle, if any, have you mastered in terms of convincing the seller or convincing the buyer? There's so many obstacles, so many hits
Obstacles
to why I shouldn't sell, why I shouldn't lower my price, or why I shouldn't buy, or why I shouldn't raise my offer.
Well, so a lot of sellers right now are on the fence. They're like, well, maybe I'll just rent it for 2 years. And kind of look at the rent laws, I'm like, well, you can rent for 2 years, but do realize that you could be down 10 or 20%. I don't have a crystal ball, but it's your apartment. I respect whatever you want to do. If you want to put it on for rent, we can do that. But know that the market might not be better a year or two from now, so you might be selling at a lower price. That kind of propels them to say, forget renting because of the rent laws, and let's just sell it. Let's just focus on selling instead of, because you're seeing a lot of apartments on the market for sale and rent, which is the people can't, the seller is in a position, they have it on the market, they're not getting any offers, they then have the agent put it on for rent, and they usually probably rent it before they sell it, instead of dropping the price to a point where
Doesn't
they can sell it.
doesn't that kill the marketing of the sale? When
It kills the marketing of the sale, but also to me, it's not educating that seller properly, that they're overpriced, and also that I feel the market is still declining, and that's what I tell my sellers. I feel it's still declining. Either drop it now, or 6 months from now, you're gonna be at a lower price.
And if the tenant stops paying the rent,
You
then you have
well, that's
8 months of litigation and not getting any rent with no security deposit except for 1 month.
Yeah, so I've created, like, with the rent laws, I've basically said, you can only get 1 month security deposit, everything's in favor of the tenant, all your protection is gone. So do you really wanna put somebody in there? Because if they do lose their job and decide not to pay you, you are going to court. You're not going to be able to get them out of the apartment. And that usually ends the rent conversation.
Right.
Do you see a lot of investors trying to unload their units? Meaning sell them off?
With tenants in there. Yeah.
With tenants in there?
Yeah.
Well, probably has more value if they're paying a good rent, right?
Yeah, but it's still, some of these investors bought in 2016, so they're not willing to take a loss, and then they're like, could you sell it with the tenant, do you have, anybody off market, and it's, but at a 20% lower price.
Jackie?
No, so what I wanted to say also is that, besides being brokers, we are therapists and we are psychologists and all the above. So the first question that I'm asking the minute that I'm actually opening the door almost, correct, and meeting with a prospective seller is the why. Why are you selling? What is the motivation? Because if the why is, well, maybe I'm testing the market, this is not a market to test the market. So it depends on the motivation and also on what I call the short-term and long-term. If your short-term plan is, I can still be in this apartment for another 5 years and I will be okay, is different than somebody's telling me, no, I'm pregnant, I have a 1-bedroom, I have to move. No, like yesterday was a situation that their business is not going well, so they are actually moving to, another area. So those people have to sell.
Mm-hmm.
So I think that we as brokers are so keen into getting the listing and so keen on the pricing that we don't sometimes read even between the lines of our sellers of what is the real reason for selling. And like, talk to me, look at me in the eye.
They
like
often
that.
won't reveal that in
Correct,
the
so
first
that's why I
second
say,
meeting.
talk to me, look at me at the eye, because I want to know that you're not lying to me, correct? So I want to know what's the real reason. Is it divorce? Is it, what is the real reason? And you have to dig deeper in order to be able to advise those people in the right way.
Well, most people that put their apartment on the market today that was purchased in 15, 16 probably needs to sell.
No, you will be surprised. Some people are still in La La Land.
Well,
Still people, with all these articles,
because they don't understand the true value then.
Correct.
But those that understand the value need to sell.
Yes, I agree.
Not necessarily.
All right, I'm going to open it up to questions, and I'm going to ask. I have a question that was written in. On older new developments or properties with renovations over 3 years old, have any of you, the panelists, had buyers discounting the shortened lifespan of the renovation? So is anyone separating the real estate from the finishes to determine value?
I've asked for warranties from sponsors. A building, if a building has been sitting there for 2 or 3 years and it's never been titled and it's a new apartment, all those manufacturers' warranties have long expired. They're usually like a year. And I've been successful a couple of times, and if you have, and having the sponsor, I want you to sell this apartment with a 1-year appliance and system warranty. And a surprising number have said yes.
And
But
same,
in this-
even
in
on the
this
sponsor
marketplace-
warranties too.
Hmm?
Even the sponsor warranties they're given, like on the
Right.
development,
Right.
they'll say, I think it's 6 months, some are a year in the
Yeah,
offering
exactly.
plans, and we're getting them to agree to extend from the time of closing
Yep.
because they've already expired.
I think the key in this marketplace is flexibility. It's flexibility on the part of the sponsor, that they're more flexible than they were, and they're giving more incentives and more warranties than they would have 2 or 3 years ago. It's flexibility in terms of how you all treat your sellers and your buyers, you know, and how we all speak to our investors and our clients as well. And so I think that's indicative of the flexibility that you need in this marketplace to continue to not only survive but to thrive.
But at what point do you start discounting the age of the finishes? Look, a kitchen is good. A kitchen is good for 10 years, right? A bathroom is maybe 15 tops.
It depends. It depends on the finishes. I mean, there are some finishes that you know will last longer than the others. I mean, you know, some people right now, you know, if you look at most of the new development, I mean, I even laugh because you get into any new development and you see that everybody more or less is using the same materials. So you have the white marble kitchen, exactly.
All right, but
The
what,
white-
but what about resale apartments? Where
That's a
someone,
different
yeah,
thing.
let's talk
Yes.
about that for a
Okay.
moment. Where, you know, people are very proud and their egos are tied into the
Yes.
property.
Well, that depends. If you are, you know, if you did the stainless steel appliances because now that's like the norm, that's what people expect. If you have the open kitchen, if you have, you know, the marble counter is one thing. But if you decided that you were going to go a little bit cheaper and you're still like with, you know, you renovated with tiles, so then you have a problem. So every single renovation will last or not last according to what they actually, you know, the materials that they use.
Okay.
And taste also, probably.
Avocado green and orange appliances are cut like what that I grew up with are coming back.
Avocado?
Avocado green.
What about Harvest Gold?
That's the chandelier, yes. And the phone on the wall with the cord.
Yeah. All right, we have a question from our studio audience.
Hi. I read recently that trusts can be the substitute for the LLC on the remaining anonymous.
No, not any longer. So it used to be when the legislation was passed in 2015 that you had to disclose the members of an LLC, all you really had to disclose was the next level up. And this new legislation has made it very, very clear that you have to get all the way up until you find an actual person. And that's the reading, the way that it's worded actually. It says, keep going up until you find a person. So the trust won't help in that sense.
And by the way, that was a mistake, the legislation was a mistake. It had to do with Rockland County and there were, I guess, the Hasidic community was selling things and people didn't know, and they passed this law and it was almost like shrapnel that caused the whole market to get caught. And my understanding with Josh Barbinell from the Wall Street Journal, the legislature is right now trying to fix that. So, and by the way, the difference in going way up, that wasn't always public record. This new legislation specifically says, and this is not subject to this so-and-so Privacy Act. So it's even a step above that. So right now, they're taking 220 Central Park West and doing FOIL requests, Freedom of Information Act requests, to find out who every single buyer in the building is.
I agree with you. I think we're going to see some changes in that law.
That's going to change.
Because that law logistically is impossible to comply with. You know, so when you have one condo owner, or like let's say a beneficial owner who buys under an LLC, and it's him and his family members who are members of the LLC, it's easy to disclose. But you also have REITs that have thousands of shareholders in them. And then how do you go about on perhaps a small building disclosing thousands of shareholders, thousands of their business addresses, and not only the shareholders, but also the officers, the authorized signatories for those companies. If those companies, very often you have development deals where you might have 15 LLCs that are in the ownership structure where a developer bought a piece of property, but he's got 5 or 6 different partners, and each one of those 5 or 6 different partners has 5 or 6 equity partners also. So now you've got to go through 15 to 25 LLCs and hundreds of people And I think that all of that was not well thought out, shockingly, by the legislature, by politicians who've never worked in this industry. So I think we are going to see some amendments. Who knows when?
Do you think people that are buying today are fully aware and understand all of these changes, or they're sort of oblivious to what's really going on? Because if they took it all to heart, they may not move forward.
I think it's a mixed bag. I think that some people are more informed than others, and some people are misinformed more than others. You know, but we do have clients, especially some foreigners sometimes, that I'm shocked that they'll call me and they'll say, "Hey, I just read about this," and it'll be this anonymous LLC law. And then we have to sort of give them guidance, and if their motivation is there, and this is what I was saying before, if the motivation is there to purchase for some reason, and for many times for foreigners, for investors, it's about capital flight, it's about having a safe haven for their hard-earned funds where, you know, they won't be depleted because of currency changes or regime changes in government or things like that, then no, it won't really dissuade people. But everybody, you know, each individual investor has their own calculation that they have to make, and they're more informed now than they were a few years ago.
And by the way, if somebody's buying for their own, to live there, if they put it in an LLC, they don't get the 17.5% co-op condo abatement. So different people, some people care and some don't. Some are just confidentiality, actors, actresses, musicians, you know, CEOs, CFOs. So it depends on what's your motivation.
Jonathan, this question is for you, and we touched upon it earlier with the low interest rates being artificially low. What's the long-term effects to real estate if they remain too low?
The long-term effect, it's already the long-term effect, is that asset prices are higher. So think of it, you know, we've had quite a long run, 30 years of rates trending downward. And so when you think of a home, someone buying a home, and you think of a pie, because you know, we all know that pie is better than cake, so I want to get right to that. So if you look at pie, and you look at the slices that are allocated for, you know, HOA, you know, maintenance, whatever, and principal and interest, right? I can still afford, you know, right at this moment, I can afford this amount of, this size pie, but if you reduce the slice size of the interest payment, the principal payment takes its place. In other words, if you reverse engineer it, low interest rates inflate the price, the cost of housing. So actually for the last, and it also reduces, it tightens credit conditions because, you know, lenders, that's why we have this weirdness with the yield curve right now, is because, you know, they borrow short term and lend long term. But as the spread narrows, they become tighter in their underwriting. In other words, they have no room for error. And so what you end up doing is you reduce the sort of the size of the net over the market that can get a mortgage, right? So long term, I think it's terrible to have low interest rates. In the short term, it can be a good thing in terms of sort of giving the market a kick in the pants, but in the long term, you don't want that. You don't want 13%, but you really want 5 or 6. You don't want 3.5, 4 for the long term. And I kind of think this is a long-term investment, you know, and you know that real estate is a longer. You should look at it in a longer view. We made that mistake in the bubble that it was highly liquid and you could go in and out. It was like a stock transaction. It's longer, and I think the problem is we've been so low for so long, and I do think in our lifetime, I think the next decade or two, we're in a low interest rate environment structurally. I don't think we're going to be talking about interest rates being dramatically higher 5 years from now. I think this is a long-term thing. Did I answer the question?
Yes. Which, and this is for anyone to answer, which year do you think we'll reach 2016?
Hopefully about 5 years before my kids have to go to college.
Yeah.
You mean pricing?
Yeah.
In terms of 2016 was a peak, so, and we're heading to 2011-12. When do you think we'll get back to 2016? Pricing of
2022.
I'd say 2030.
2030.
No, because when
We're
the,
still in the dip. We're
yeah,
still.
but when the market turns around, it turns around fast and prices go up fast.
Correct. And it's hard to see that when you're in the dip.
When you're in there. That's why it's a really good time to buy.
Exactly. That's right.
Do we have any other questions here?
Question?
Where? Yes.
This is for the brokers or Jacky. Do you see any buyers that come to you and say, my budget is X, I'll go condo or co-op? And when, as you know, 75% of the buildings out there, the co-ops are getting old in their 70s, 65, 70 years old. Things happen like old cars, old people, whatever. And the maintenances are creeping up. I'm seeing one bedrooms at over 2,000 and blah, blah, blah. Do they switch to the condos? In your experience?
Well, I think it's the thing, you have to think that even the maintenance in those buildings are higher, but then the price is higher, correct? So the condos have a higher purchase price and maybe lower common charges, real estate taxes, even though that now it's starting to get more even because all those abatements of those buildings, the condo buildings used to have gone away, have expired. So now you are seeing much more an even situation between condos and co-ops, but co-ops still have a much lower purchase price. So the gap, it's widening between the prices of co-ops and condos. It's still like, 25 to 30% now between condos and co-ops. So that's the trade-off. So it depends. If you have like a parent buying for a child and the purchase is in all cash and then the kid has to pay for the maintenance, they will go for the lower maintenance. So it all depends on who is the buyer.
If you take common charge plus real estate taxes in a non-abated building for all of Manhattan and you compare it to the monthly maintenance charge, both on a per square foot basis, they're very similar.
Final question, Steve, could you tell us the difference between a trust and an escrow account?
Not very much difference in New York. It's semantics. An attorney trust account is also an attorney escrow account. Most of us here will have IOLA accounts, which is, yes?
Yeah.
IOLA, interest on lawyers' accounts. It is an attorney escrow account whereby interest is generated, but neither the purchaser nor the seller gets that interest. It goes to fund the programs for the bar.
It goes to the fund, like if somebody, I think they even use that if somebody like misappropriates.
The disciplinary fund.
That's the New York Lawyers Fund,
Oh,
which
this
is
goes
different than the IOLA fund, which goes to fund programs typically underprivileged poor sectors of society.
Almost like a legal aid.
Yeah.
So, in Jersey they call it the attorney trust account. In New York we call it generally the attorney escrow account. The mechanics of them are not very different at all.
I guess part of the difference is that theoretically or literally actually, when it comes to an escrow account, the person who put in those funds is entitled to the interest. Whereas in the IOLA account, the interest is then, as you said,
you use IOLA?
No, it's, because it's interest and an escrow account could be interest and not interest bearing.
It can be.
So.
It's segregated escrow account.
Exactly.
There's no interest to speak of right now.
People for at least.
All right, on that note, let's thank our panel.
Thank you.
Thank you all very much.